Hello and welcome to the Green Profit Academy Pros podcast. This show digs into the challenges in growing a lawn care and landscape business while maximizing your profit. I'm Christine Era.
And I'm Steve Bousquet. We are the green industry experts in profit, growth, and leadership. Hi, Christine. How are you today?
I'm good. How are you doing?
I'm good. It's a Monday. We usually don't do the podcast recording on a Monday. How was your weekend?
It was good. We got some beautiful sunshine. We have had some unfortunate smoke from the Canadian fires, which is really sad to see that they're struggling with that right now. And so we've got some bad air quality going on, but we did get a mixture of some good rain, which helped clear out the air. And we have some sunshine coming through this weekend and throughout the rest of the week. So I think spring has finally sprung here in Colorado and people are ready to do their landscape and they're out in the yard.
Yeah, we had in Connecticut, we had 1.5 inches of rain on Saturday, much needed. It hadn't rained for about 2 weeks. So the lawns and plants are really enjoying the rain. It enabled me to have some time to catch up on some of my lawn care YouTube, watching some new products and some new techniques, and reminded me of how much people are into their lawn as much as I am into lawn care. So that was enjoyable. And today, on today's podcast, we're going to be discussing the scalable growth business model. We're going to unpack what the scalable growth business model is, what the strategies are, and what they enable a company to do. And at the end of this episode, we're going to have a special share, a special offer for the first 5 people. We're going to have a code that they can use to get their free, they can do an assessment of their own scalable growth business model to see where their company is, what stage you're at, and help with some strategies to move them toward their goals. So, Christine, the Scalable Growth Business Model is in Chapter 8 of Profit First for Lawn Care and Landscape Businesses, the book that you authored. Why don't you share with us what that is, what the Scalable Growth Business Model is?
Yeah, this topic, it's a fun topic for me to talk about because years ago, Steve, you and I were sitting here on a call, online, and I was talking about how clients always ask this, and they ask, how can I scale my business? How can I grow my business and ensure I'm profitable? And, how much should I be spending on equipment and these, other things like payroll, operations payroll, field payroll, all these questions. And you said, I would love to know that. Like, that would be amazing to know. And it was something that I had been working on for years. And the Profit First for Lawn Care and Landscape Businesses book just gave me the opportunity and kind of that, creative permission, so that license to be creative with, designing the scalable growth business model. So what a scalable growth business model is, it's a type of business strategy that allows a company to grow and expand its operations while maintaining its profitability and efficiency. And how we talk about ours is scaling and growing your business while maximizing your profit, because that's how we designed our scalable growth business model concepts in the Profit First for Lawn Care and Landscape Businesses.
So it's a strategy. It lays out basically how a company grows and what the percentages should be like. At this, if you're under $1 million, this is how much labor should be. This is how much material should be. This is how, depending on your business model, depending on where you are in the country, whether you're running 12 months a year, like down in Florida, you can go, or whether you're a northern company and you're doing like green on 8 to 9 months a year and then snow 3 to 4 months a year, or if you just shut down in the winter, so you're green 9 months a year and then you close for the winter. And then, so there's also the model where you have like maybe in Alabama or the Carolinas where you have this big, you could have something that really disrupts your business, like hurricanes and floods and a month and a half of rain. So there's four different business models that you can plug into this scalable growth business model. And once you identify which model you're in, your business is in, then you plug this into that, and it helps you to kind of guide you at this amount of revenue under a million. This is what owner's pay should be. This is what labor should be, et cetera, et cetera. And then between a million and 2.5 million, 2.5 million to 5 million, over 5 million. So it's not a surprise when you're growing your company that your percentages change. Am I about right with that?
Yes. Yeah. And that's the key word, right? It's like, it's not a surprise. Like, we don't want business to be a surprise or these costs to be a surprise. So it is a system that you can get set up in your business and utilize. And the way that I designed it is more around like advanced profit first methodologies. And the reason I did that is because so many people in this industry and in the trades industry, they love profit first. They love Mike Michalowicz. They love, the pumpkin planning, the clockwork, the fix this next, like, all the Mike Michalowicz things. And so for me, the concept of what can we do to make it similar to something they already know? And so my solution was using a similar, setup like Profit First is. And the interesting thing in building this out is what I found was typically this model or this concept is leveraged by, let's say, tech startups or other companies that are innovative in offering services and products that can easily scale and meet the needs of a rapidly customer growing base in their company. And I thought, well, we work with lawn care and landscape businesses, and sometimes these guys go, oh, we're going to do 12% growth this year. And unexpectedly, and we saw this especially during COVID, they did like 36% growth, or higher. And it was just kind of out of left field. And it's like, well, how do we handle this? So really working with them through that process and understanding, how do we make sure that you're not bleeding profit while you scale and grow your company? And if these other, savvy businesses like tech and other innovative type companies can utilize this, we can make this work and create a platform for the trade companies and the lawn and landscape companies, to utilize this concept too, because knowing what you need to spend based on your revenue level in these different areas can be a game changer for you.
Oh, absolutely. So, a guy starts out, starts his business. Like, I think the first year I was in business in 1983, we did $13,000. And, there in that business model, the scalable growth business model, it's zero to $250,000. Tells you what your materials and subs should be, your payroll should be, labor, operations, equipment, vulnerability savings, down season savings, net profit, owner's comp, taxes. I mean, this is a true guide, and it tells you between 250 and 500,000 what it should be, between 500 and a million, which is kind of where a lot of people can get stuck in that 500,000 to a million. And they want to grow crews, but then they hate their employees, but then they love their employees, and they have all this business. So it's, how do you balance that out with your expectations and what is reality? And then to break through that million to that 2.5 million to 2.5 million, your scalable growth business model breaks all the percentages out of all the expenses and costs. So people aren't, because the question I always see on Facebook is, how much should I pay myself? How much can I pay my people? How much should I charge? And really, the scalable growth business model just it tells you that based on percentages. So with a little bit of homework, and we're given 5 free scalable growth business model assessments away in the end with a code. You can figure that out. So you don't have to ask guys on Facebook who A, don't have an accounting background, B, don't even know your business or haven't even asked questions. That's my favorite thing about Facebook answering is how they can answer all these. They'll have one question. They don't ever have to ask any other questions. They know everything. So this is like legit real deal for a real business. This is for somebody who's really serious about their business. They have responsibilities to their family and their future, and they want to make a change and but do it strategically using a tool like this.
Right. Yeah, and we've used it in a couple companies, several companies, but during the testing, like we used some of the concepts in your business. Another client that we rolled it out with was, with Sid Sexton, which we'll be interviewing on a later episode of Sexton Landscape, and because he's one of those movers and shakers, like go getters, like I want to grow my company. How do I do this? How do I know that I'm doing the right things? And he gets his team to get in there and help him do the heavy lifting in his business. So identifying these percentages were really great for him as he was looking at, well, where are my profit centers? How could I really utilize this profit first concept in my business and grow my business? And so this was, one of the people that I tested this method out on, and it was very insightful for him and his team and where to focus their energy.
Yeah, that's what I was going to ask you. So, like, who is this for? I know I've tested it. We tested it with other companies. I know that people have been taking this assessment, and it really lines up pretty strategically as long as you take the time to do the assessment. So, who is this for? Right? It's for companies, men, women who are running a company, but they want to know strategically where they're headed and what their expectations can be. So it's not the hope, pray, work hard. I did the work hard and know which truck and mower to buy and the fertilizer and dirt to use, and that will only get you so far. This strategic method is way more effective. I think it's going to get people further faster.
Yeah, and we've had some of our coaching clients take it and they came to us and said, I know something's wrong. I don't know what's wrong. And I don't know what area that we're having problems in. And as soon as they took that scalable growth business model assessment and I looked at the results, I could tell right away. I was like, you're either your equipment heavy or you're not charging enough for your equipment. And I can see this because of X. Or let's talk about your labor. What's your crew size? What's your labor burden? So we started unpacking that. So I could instantly tell by this assessment where the profit bleeds were happening in the business. And we could start having these conversations sooner and addressing the problem in our coaching calls versus, trying to flush it out and, getting maybe some of the books cleaned up or, it's like, let's take 20 steps before we could take one big step. Like we could take 2 steps and then one big step just by zeroing in on these trouble areas of their business. And that's why I really love this assessment. It gets us there faster. Those who know me, I'm not a person who likes to wait around. I like to get there lightning speed and get some answers. So,
Yeah. People don't have time to wait. People are, counting on us, our employees, our families, our vendors. We don't have time to wait and figure this stuff out. If there's a tool right in front of us that we can just use and move forward.
yeah, and there's profit to be made. Like, let's not waste another day. Let's, capture that profit in your business.
Right.
So,
Right. Profit's a habit. It's not an event.
exactly. Yeah. So
No.
there's some key features that the scalable growth business model includes. And I think those would be good to educate our audience on today. So there are 5 key features in a scalable growth business model. So overall, a scalable growth business model enables a company to quickly and efficiently scale its operations and meet growing demand while still maintaining high profitability and a strong competitive advantage. And so I want to kind of unpack what those key features are today and how our assessment, what it will support in your business and what it will help you understand a little bit better.
All right. So number 1 is high margins.
Yes. And this is, I know, one of your favorite topics, Steve. So I'm going to let you unpack the high margins and the challenges around that
So
one.
what does high margins mean? So high gross profit margins. So, we talked about it on one of our podcasts about sexy gross profit margin. What is that? And I have visited, dozens and dozens of businesses and looked at their books. And always see if it's a 40% gross profit margin, that means it's kind of the smoke alarm for me, because if it drops below 40%, there's just not enough, there's not enough money left in the business to pay the overhead and take a really good profit and have that owner's comp be where it should be. So the sexy gross profit margin for me is 60 to 65%. So that's kind of the high margin that we want to focus on, that 60 to 65%. And that's after your cost of goods sold. So you're going to take your total revenue, subtract your labor and materials, equipment costs that are directly used to produce that revenue, and that's going to give you your gross profit margin. So 60 to 65% is kind of the sexy sweet spot, and 50% is really the minimum that you should be shooting for, that will give you enough. Even if you can run a more lean overhead, but that 50% is kind of the lowest that you want your lowest gross profit margin to be. And the company should have high gross profit margins, which allows it to reinvest in the business and scale up operations without sacrificing profitability. Because if you don't have the high gross profit margin, then you have to take the money out of your profit to grow. If your gross profit margin is high enough, there's enough to still have profitability and grow. And number two is, and I know Christine loves systems, so she's going to discuss the repeatable and automated processes.
Yeah, so I'm always about, what can we automate and what can we systematize? Like, what does that look like? And I love this concept because one, it contributes to the decision tree in your business, which is a clockwork concept where they talk about, what is a decision tree and how do we establish one in the company? And this is something that happens over time. It's a journey, just like automated systems and processes. Like, what can we repeat? How can we, make this something that we can do over and over again, and it doesn't change based off of the customers that we serve. So the company should have systems and processes that can be easily replicated and automated to keep up with the growing demand. And we also talk about this in the sweet spot assessment, which is the pumpkin plan side of the business, and making sure that you have systems to where your company is not relying on an individual. And this individual could be you as the owner, or it could be one of your lead technicians, a manager, a key team player. We don't want your business to be reliable on a person. So those automations and those systems that you create and build in your business, and your team can create and build in your business, that is what's really going to create a solid foundation for scalable growth as you move forward with your company.
And we had a few years ago, when they were writing the Clockwork book, we had an interview with one of the people that was working with Mike McCallowitz writing the book, and we go through different interviews and stuff. And we had discovered in my own business that we kind of had a bottleneck, and it was the scheduler. And so there was only one person in the company that knew how to schedule. So if that one person was out, nothing was scheduled. So now we have it so multiple people can schedule. But scheduling is a system, but it was only ran by one person. And, that was something we identified. But a system can be, as simple as if you have plants in your holding area, like we have plants in our holding area, it's on an automated irrigation system. That's a system. It's repeatable. No one has to go out and water the plants. It comes on 3 times a day, and it waters depending on what type of plants they are. It could be signing up customers, processing payments, processing payroll. If the owner is the only person that can do payroll in the whole company, regardless of the size, then the owner can't be there. How does the team employees get paid? Like that's a thing I hear frequently, actually, that the owner is still doing payroll, and that could be really damaging if the owner is unavailable for any reason and nobody else knows how to do that. So it could be, marketing, and we were talking about this earlier, having that that retargeting marketing. So if somebody hits your website, they get followed around for a little bit, offering, "Hey, do you still want information?" But that's automated. And as a company grows, the more automation you have, the more scalable a business is. And that's why, like services that are resaleable, like mulch, mowing, shrub pruning, trimming, lawn care applications, anything that is even like pond openings and closings, irrigation opening and closing, anything that can be like scalable, schedulable, that's an easier way to grow and scale a business. You can also do it in landscape insulation as long as you're installing, like, we do this type of install, we do this with these types of plants, this is our style, this is our look. And if people are still, every job is unique and only I can design it, that makes it very difficult to scale it. So if you're looking at a scalable business, you have to have something that is, repeatable and automated.
Yeah, and this is one of the symptoms that occur to where if I'm looking at a scalable growth business model assessment and I see that their operations or even their field labor is too high, I immediately ask them, like, what is your team doing? Like, what's their capacity? How are they doing things in the company? And do you have repeated and automated processes set up to free up your team's capacity? Because one of the reasons your labor can be too high is because you don't have these repeatable and automated processes set up in your business. And so that's one of the places you can start tightening things up, is looking at your processes and seeing what isn't automated or what isn't documented or the team isn't trained on, so everybody's doing what they're supposed to do in a process or a system.
And a system processes can sound really complicated. One of the easiest ones that we've done for our landscaping is inside the beds of the dump trucks. It's marked. This is where 1 yard of mulch is. This is where 2 yards of mulch is. 3 yards. So if you tell someone put 5 yards of mulch in a truck, it's the same 5 yards of mulch every time because it's marked out. Now there'll be a little bit of a pitch. It always mountains. Always has that angle when you load it, but you can smooth it out, or you can actually say peaked. This is how much mulch is in it. But whatever you're deciding to do, however you're deciding to do it, you don't have to follow that. That's just an example. But if you're doing, hundreds of yards of mulch, you have to have a system for how to tell how much is in the mulch. And you have a loader that's going to load that. Maybe you get a bigger loader so it's more efficient, or you practice loading so the guys can do it quicker. But even loading mulch, as simple as that, can save thousands. Having a system can save thousands of dollars in inventory mulch and also in labor.
Yeah. Yep. That's a great example. So our next one is strong value proposition. And I will let Steve talk on that one because I know it's something that they have worked really hard on in their business and have done a fantastic job at creating that.
Right. So a strong value proposition, a company should offer a unique and valuable product or service that sets it apart from competitors and attracts a larger customer base. And I have been told, for my lawn care and landscape business that, I often hear nobody else does it like that. Nobody else does it like that. Nobody else does it like that. And every time I hear it, it's like music to my ears because that's what I want to hear. I don't want to be like everybody else. And one of my favorite quotes is, they laughed at me because I'm different. Well, I laughed at them because they're all alike. So, having that unique proposition, but it has to be meaningful to the customer. And, we've worked with you and the pumpkin plan. And one of the things we did our wish list interviews and talked to our customers. And communication is one of the biggest things that our customers, our giant pumpkins, love. And not over communication or educating them, but letting them know, what the expectations should be surrounding this project or lawn care program or seeding. They want to know, when is it going to happen? What is the follow up? What is the process? So, we have someone that just takes phone calls and someone that just makes phone calls. And we share, printed, this is what to expect when we do seeding. This is what to expect when we do lawn care. And even how to pay us is differently, is different than other people. We don't do it the same way. How payment, you can pay in full, you can pay in thirds. but we line that up and automate that so it's always automated and the customer knows what to expect. Instead of like a lot of lawn care companies, I know they'll do the application, they'll hang the invoice to the person. The challenge with that we found for our customers were they never know when the lawn care company was coming. So they get these like unexpected bills. And, people do not like unexpected bills. So we line it up. This is when your first bill is. This is when your second invoice is. This is when your third invoice is. And this is when it's due. And this is how you can pay it. And I've even made videos for people like, hey, this is an estimate we left for you. This is what's in the estimate bag. This is what the contract says. This is how to sign up. And so, I don't know if there's anybody else doing any videos that explain it like that, which is fine with me. So that value proposition for us is not cheap. It's not the best. It's really how do we serve the client and make the less friction in their experience with us. So it's communication, 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 and that's setting expectations, following up, and being there when they call. So that's kind of our value. Being the cheapest guy is always a challenge because there's always someone else that doesn't know their numbers or their costs or they don't know what they're doing and they can be cheaper right behind you. So, in being the best is kind of hard to measure because I hear that I want to be the best landscaper in Indiana or the best landscaper in Florida or Connecticut, wherever it is, or in my town. But, by whose definition are you the best? And, you really want to make sure you're the best in the customer's eyes that you want to be the best too. So knowing who
Yeah.
your sweet spot customer is and serving them. And I pride myself on my business of not only like out communicating other lawn care and landscape businesses, but all businesses, all small businesses. I want any experience my clients have here to be better than any experience they have with any business. So, but it all goes back to the communication, which we figured out by doing our wish list interviews with our client. And you don't have to do that. You can look online. If you look at 5-star reviews, for lawn care and landscape businesses and most other businesses, it all goes back to communication. So just whatever your strong value proposition is, whether it's knowledge, price, communication, just make sure that you're aware of what it is and that it's serving your clients and it's
Yeah.
serving the clients you want to have.
Yeah, and it's going to be different based off of your location. So, what could be a strong value proposition there in Connecticut could be completely different in Texas because Texans, are not the same people as the people that live in Connecticut. So, that's one of the things is understanding your strong value proposition for your market. And it could be similar, but it's going to be a bit different because people are not the same based off of where they live. They have different, core values, different culture, things that they connect with, even kind of tribal knowledge or words that we use, based off of where we're from. And that can really land with your ideal customer as well.
Yeah, you have to really talk to your customers and see what's important to them. How do they want to be talked to? Yeah, you could just go to New York City, or they're not here all the time. Like people come up from New York City, they have this summer house. They don't want as much communication all the time. They want it very differently because they don't want us leaving stuff at their summer house that they're only there on the weekends for. So you have to even, talk to your customers and see how they want that communication delivered. But right, somebody in Texas might want something completely different. You have to study your customer where you're at. And most of us are operating small markets, right? We're not worldwide web companies. I'm in the eastern side of Connecticut. You're in the south central part of Colorado. Could be two completely different expectations from clients. So make sure you do your homework and plug into theirs. Don't just have, and I've done this, that's why I'm saying, don't just have a great idea. Like, this is what people want and spend all this money and marketing and effort. And then, like, wah, wah. And then because I didn't ask people, I didn't say, hey, would you spend your money on this? I just like, this is a great idea. So I've learned over the years that I've made some expensive mistakes by just not asking my customers.
Yeah. And not just what, but when, right? Because when they want to buy it, can make all the difference of if they buy it, even if
Right.
they're interested in buying it. So when would they buy it? So
Yeah.
that's important as well.
Yeah. All right. The next one is access to capital. The company should have access to sufficient capital to fund its growth and expansion plans. Why don't you
Yes.
take this one, Christine?
Yeah, and this is where I feel, profit first can be a game changer and the scalable growth business model can be a game changer. And I talk about this in the book where, just starting off in the advanced profit first methodologies. And we have found that a lot of our clients that we've worked with to get their ship turned around and get their business profitable, they live off of the wrong funds in their business. So, they're living off of their prepayments that their customers are giving them for the new, spring launch if they're a lawn care company, or they signed up, a new landscape contract. And then instead of setting those funds aside for when it's delivered, they're using those funds. So it's the concept of robbing Peter to pay Paul to keep the business going round. And this is because there isn't the right capital being created in their business and their business isn't financially healthy. Core Growth Strategies provides business growth management solutions through cloud accounting, bookkeeping, and strategic business consulting programs. Our team works with small businesses in lawn care and landscape and trade industries throughout the U.S. We increase our clients' business acumen by creating business performance transparency through financials and strategic advisement based on industry best practices and benchmarks. Our experienced team provides support, guidance, and coaching, thereby allowing our clients to connect with viable data and discover their own solutions. Core Growth Strategies programs and services are designed to get your business from where it is now to where you have always dreamed it to be. Visit us today at coregrowthstrategies.com and follow us on Facebook, Instagram, or LinkedIn. Don't miss our exclusive limited time podcast special. Just mention promo code GPA Pro to any member of our team during your complimentary consultation, or enter the promo code on our site when you sign up for one of our online programs. That's promo code GPA Pro. So there's different ways that you can access capital in your business. You can create your own capital, which I love to talk about strategy on how we can create your own capital in your business, because there's so many amazing ways that you can do this, or while you're creating your own capital, or even if you have your own capital in the business, you can leverage opportunities to spend other people's money where you're getting a higher ROI on that money, meaning return of investment. So making sure that either you can fund your own growth by utilizing a system like Profit First and utilizing the strategies around how to use that money and where to infuse it in your business and when and on what, or having those lines of credit that you can borrow some money or have an investor. But really the key for any one of those options is to make sure that you're utilizing this capital in the right way. So you just don't want to have, access to it. You want to have a plan in place to make sure that you're infusing that cash in the business in the right areas and at the right time on the right things. So that could be a game changer on whether you grow your business, to a multi-million-dollar business, or you're just growing at a couple $100,000. It's like, which one would you want, with a high profitability? So making sure you have access to the capital and then utilizing it properly is a key factor.
And utilizing it properly is a key factor. And that's what the scalable growth business model does. It kind of lines up what you should be spending on your equipment, your labor, because some people will take loans and then pay for labor, and they're funding the labor with a loan, and because they're not charging enough. And I've done that. That's how I got myself into trouble in 2000, 1998, 99, 2000 was I wasn't making enough money, so I would take a loan basically to pay myself and cover some labor. So, I was not using that to grow the company. We weren't charging enough. We had too much too much like labor per crew. And, it's that anything, when you see more than two guys on a mowing crew, somebody's an audience. That third guy's watching somebody do something at some point. And like I said, on other podcasts, I have lots of data to prove this. So, how do you, when you borrow that money, you go to the bank, your uncle, whoever you're borrowing that money from, it has to go in a place that it's going to get an ROI, return on that investment. So if you're going to use it to borrow equipment, or you get, the equipment loan through whoever, Sheffield or a bank, that equipment still has to have an ROI. So it has to produce enough revenue, not only to pay for itself, but also pay for the interest on the loan. And also you have to get a return on that. So you should be getting gross profit margin off of that equipment. So if it's costing you $12 an hour to run, to get a 50% gross profit margin, you should be charging $24 an hour every time that runs. And not only does that at the $24 an hour, it pay for the equipment, pay for the operating equipment, but you're getting 50% margin on it. And that's really how to get a return on investment using your equipment. And so some people say, oh, I don't want debt. I don't want to go into any debt. Debt is if you have that's unleveraged debt that most people have a concern about. But leveraged debt, if you're going to get a return on investment on it, I'm fine with, because if you borrow 15 grand for a lawnmower and you're going to, you still have a $15,000 lawnmower when you take it out of the dealership, depreciate $1,000, but you have an asset against that liability of $15,000. It's not just the money's gone. So it's not actual debt, because you have a liability and you have an asset that offsets it. So it's zero. So just, be aware that you are, if you're funding equipment that's going to return an ROI, it's not debt. I know there are certain gurus out there like debt's awful, pay everything in cash. But I would not tell somebody, hey, take $15,000 in cash and invest it into an asset that's going to depreciate and be worth zero in 5 years. That's why if you take the loan, you pay the loan off, the asset's fully depreciated, and you're at zero. But your customers made all the payments for you. You didn't take your own 15,000 and put it out there to depreciate. Your customers paid for the use of. So that's a whole nother conversation. But make sure that you get your capital lined up before you need it. Don't wait until you're ready to grow and start going, who do I need to talk to? What financials do I need? Make sure that you're working with your accountant and you have all your financials set up. So when you do need to get a loan, it's ready. That saying, dig your well before you're thirsty. That goes for even, getting these loans lined up, whether it's for equipment, expansion, office, whatever it's for, making sure that you get that ahead of time. Because what you don't want, there's an opportunity to grow. And then you bring your financials and your books aren't in order, your balance sheet's out of order, your taxes, you did things to pay less taxes, but now nobody wants to give you a loan. So you're stuck. So sure, you save a couple bucks on taxes, but you can't grow anywhere because nobody will help you with financing. So
Yeah, and we've seen that a lot, over at Core Growth Strategies. We work with clients to make sure that their financials are in order, so their books are in order, and that they're transparent enough to where they can see how their business is performing. And it's very common when a client comes to us and they're like, well, I've been working with this accountant or this CPA or this bookkeeper for years and they're amazing. And I'm like, well, you shouldn't think they're amazing, because after we took a look at your books, there's so much room for improvement. And do you know this? And do you know that about your business? And do you know, what your profit center is? And they're like, no, no, and no. And I can't help but think, do you still think your CPA, accountant, or bookkeeper is amazing? Because we've got some work to do. So that's very common where we see, they need capital and they're not ready for it because their books are not showing that their business is an asset, because the way that they've been managing and utilizing their finances, their cash and their business over the years. Even if their books are clean, if you don't use your cash right, you're not going to be ready. So it's being smart, not using your business as an ATM machine.
Yeah, absolutely. Okay, so we went over access to capital. The next is ability to scale. The business model should allow for easy scalability as the company grows without a significant increase in costs.
Yes. And this is important. You can go about this, several ways. It's looking at your systems and processes. It's looking at your team. It's what services do you provide? Do you have your sweet spot of your business really dialed in? And, on a previous episode, not too long ago, we talked about the sweet spot, where you can get a sweet spot assessment. So go back and look at that episode if you haven't listened to it yet and find the link. So it's going to tell you how far away you are from scaling smoothly. And if you're in the sweet spot of your business, you can scale your business. It means that you have, the right service and product that you're offering. You can offer that again and again and again. You are servicing the right customers. So you know who your ideal customer is and why they're going to buy what you're selling. And then the systemization. So making sure that you have processes and systems set up that you can hand over to people, or they can help you develop them so that way it becomes seamless as you scale your business, without a significant increase in cost. And that's, again, where we see on the Scalable Growth Business Model Assessment, too much money being spent on equipment, too much money in, their total payroll when it comes to labor and operations. They don't have that ability to, scale their business smoothly because they are spending too much, because there's other areas of the business that are not established or set up properly.
And one of the big areas that I see when I'm talking with potential clients and clients about scalability is they're estimating, like having a system to estimate. Only the owner can estimate because he has this tribal knowledge of how long everything takes. So they don't track how long it takes to put in, edging. They don't track how long it takes to mow certain size lawns. They don't track about how long it takes to mulch a job a certain size, and only the owner knows that. So the estimating is one of the first pieces I see that if that's not systemized and that you don't have production measured, that it really can slow a company down. And then the other thing is also like, what are you delivering? What are you producing? And I did it. We did everything under the sun. We did, annual flower change outs, driveway sealing, litter cleanup, parking lot sweeping, landscape installation, walls, drywalls, whatever somebody would pay us $1 for. It's very hard to scale at that because, I end up with equipment sitting there. They are not excavating something. The excavator sits there, as opposed to being the guy that does, dry wells or does, irrigation or whatever, your lawn applications, whatever you're choosing to do. And I see the easiest way to scale is to do more of what you're already doing really well. But you have to identify what your profit centers are, because what you don't want to do is scale the least profitable thing in your business that takes the most capital to produce, and you want to scale something that's giving you the high ROI. And that could be, it could be whatever it is. It could be landscape installations, because you could practice how to do it. It could be doing drainage. There's companies in Pennsylvania that will run 3 or 4 drainage crews because they're so well trained that they know how to do it, and that's how they scale it. Trailers, and that's all they do every day is this drainage work. So, identifying what you're making the most money on and scale that. It doesn't have to be, you're going to do curbs, concrete curbs, and you're going to do ponds, and you're going to do Christmas lighting and pruning trees, feeding trees. Then you're going to, mow with real mowers and then mow with electric mowers, all in the same company. So the more you start diversifying, the weaker your brand gets, and it reduces your ability to really scale. Now, there's some multi-service companies that scale, but typically they do it by purchasing other companies that are doing multiple services. But it takes a lot of money to do that. And if you're trying to grow organically, it's much easier to grow organically, and it's faster if you're just doing what you're already doing, more of it.
Yeah. So just as a quick recap for, those listening, because we, dove a little bit deep into all of these. So the 5 key features in a scalable growth business model that you want to pay attention to is high margins, repeatable and automated processes, a strong value proposition, access to capital, and making sure you're ready to access that capital when you need it, before you need it, and the ability to scale. So one of the things that we did was in the Profit First for Lawn Care and Landscape businesses, if you've read the book, we took the scalable growth business model concept and we turned it into a tool. We have, as Steve shared earlier, multiple charts in there that talk about the, 4 different business models. We have the revenue tiers, just like Profit First does. We added a few revenue tiers because, businesses encounter peaks, valleys, and plateaus from the bottom of the entrepreneur mountain to the top. And there's also revenue tiers that companies can get stuck in. So we made sure to outline, based off of the lawn care and landscape businesses, and this is even applicable to some trade businesses too, is what are your spending per category in the scalable growth business model? What are the percentages in order to ensure that your company is financially healthy? And we based these off of different revenue tiers. So we have 7 different revenue tiers that we outline in the book, and we have multiple categories based off of your business model. So if you're not properly navigating through these revenue tiers, what's going to happen is your company is going to get into too much debt and you're not going to be able to move forward to the next level. So the goal in utilizing this tool is to stay true to your business model and stay profitable while you grow. We've also included some other tools in the book that I really love. And we're unpacking like, how do you know when to add another crew member, or how do you know, when you need to add like an entire crew, a truck, some new equipment, and being able to outline that. So we take you through some steps with some tools in there as well. And, the best way to accomplish this goal is to use this tool to forecast and manage your financials for growth strategies overall. So there are some advanced methods of Profit First in there, and you're utilizing the Scalable Growth Business Model dashboards so you can easily locate your revenue range along with the percentage you'll be spending at a minimum and a maximum in each expense category.
I'm looking at the chart right now, and it really lines up with the clients we're working with and their profitability. Because if any one of these is off, we know. Like I was working with someone, and their materials and subs were 36%, and guess what? Their profit was off, right? Because it's too high. That materials and subs for them should have been between 15 and 20%. So we know right away, okay, we're not, and what we found, the markup on the material was not high enough. And they weren't marking up their subs at all. So that's why, they were getting no gross margin off of that. And that's why that percentage of their total revenue was so high. And also that their total field labor was just above the 30% that they should have been at. So just in a really short period of time, we can identify where the challenge and issue was and then go to work immediately to correct that.
Yeah, and the other thing too is we included so many categories. So we wanted to make sure we didn't miss anything, or I should say, I wanted to make sure we didn't miss anything because that's kind of how I roll. I'm like, did we get everything? Did we dot every I? Did we cross every T? And when you're running your money in your business, your percentages for Profit First, this is important. And I always tell people it doesn't have to be perfect. Let's just get it close enough so we can move forward. So this isn't something to where if you go and take the Scalable Growth Business Model that I want you to obsess over the numbers being perfect. A little bit off here and there is not going to change what your outcome is. You're going to end up somewhere, in the ballpark, and that's where you want to be. You want to be in the ballpark. So the different categories that we have, just like on the basic assessment, we have total revenue, which is all the money your company generates before sales, in sales before costs of goods sold gets taken out. And then you want to look at your materials and subcontractors like Steve was talking about. And this is, he made a really good point, is if your percentages aren't right, there's a reason why. Like, are you spending too much? Are you not charging enough? What is that? Do you have too many subcontractors in your business and your markup on them isn't set up properly? So those are some areas that can really show up when you do a scalable growth business model to tell you there's a problem. The other areas that we have is we have, total payroll. How much should you be spending based off of your revenue tier on total payroll? And then it breaks down in more detail to where we unpack the different areas of your business, which could be your profit center. It might be maintenance, lawn care, landscape, snow removal, irrigation. So, all the areas of what percentage you should be spending. And those are a range because every business is going to be different, to where you might have higher payroll in landscape and lower payroll in irrigation. So the point is to add all of those up and look at your total payroll. And we also want to look at your operations payroll. And this is, I think, one of the biggest bleeds that we find next to field labor and equipment is they have too many administrative staff supporting the business. And, we really want that in between a 5 to 20%, up to 25%, depending on the size of your business. But the smaller your business is, the lower your operations payroll percentage should be. And you want to make sure you have that dialed in. And it could be either A, you have too many people supporting your business on your administrative staff, or you have the wrong people supporting your business and you're paying them a salary. And I've seen this for people who've been employed at a company for many, many years. And now they're at this really high salary, but they can't do all the things the company needs them to do because the company has scaled and it's grown, and they can't do books. They used to be able to do some of the books, but they don't have that skill set. They can't manage all the customer service. They can't do the marketing. They can't do all the things that a company needs. So you need more people. You add those more people, but you have, your other people still on a higher pay. So it could be simple things like that. And that's why we provide those percentages per revenue growth in the scalable growth business model. And there's other areas like equipment, which Steve has talked about. We've talked about the equipment spend on a business. And the other accounts that I really like that I think we should talk about, Steve, are the vulnerability season savings, the flex season savings, and the winter down season account. And we outline what percentages per your revenue base should you be putting some of your revenue into these different accounts.
All right. So the different accounts are, this might be new to some of the listeners on this podcast, like the vulnerability savings account. What is that? And I had mentioned that earlier about the hurricanes. And, we don't know when they're coming, but they're coming at some point, whether you're down in New Orleans, whether you're in the Carolinas, you're going to get hit with a hurricane. So, or even Texas, this account, Florida, all those states, right? So this account is to put a percentage aside. So if you get hit by a hurricane and you can't do work for a while, or if you have to do work like cleanup and then wait to get paid by the insurance companies, you have money to operate. You have capital to operate. So depending on the frequency of this or how often it's going to happen, is going to depend on how much you can save toward this. But you definitely want to have a vault account, a savings account for that vulnerability season. And that way, if everybody else gets wiped out, you can still run your business and generate revenue. I remember down in the Keys, there was a really bad hurricane and companies were coming from northern Florida to help clean up. But, it was insurance claims. So it could be, 60, 90, 120 days before you're going to get paid from the insurance companies, and you need enough money to make it through that period of not getting paid. And the down season account, being in the Northeast, is, it's for that winter time. And especially if you're in the green industry and you're like 9 months of green and you don't plow. So you have no revenue at all in the winter, This is where your down season savings account, it's the amount of money that you're going to need to make it through the winter for payroll, for rent, for your mortgage, for your equipment, whatever the costs are going to be. So there's a percentage of that in down season account. And then there's the growth account that also you can do. If you want to grow your company, you can actually start setting money aside for that. Because what happens is as we grow our company and we bring new employees in, and we just had this conversation last week in a coaching call, they bring these new employees in, they're not that productive for the first like 2 to 3 to 4 weeks. So you're making payroll to this person, but they're not producing at 100%. So they're not even producing enough money really to cover themselves yet because they're new to the industry. You're training them so that growth account can help cover the payroll that you're lacking from their productivity. And that's to be very strategic. Okay, I have this money, and when we have that payroll and they're not really covering their own cost, this is what we can use our growth account for.
Yeah, and we have, so the growth account isn't something we included in the scalable growth business model, but it was something that I write about in the book. And I wrote about it because we utilized this strategy with a client. And, this client grew from just under 2 million to 9 million within a couple of years. And it was because we were being very strategic about building capital in the business and him not just going everywhere and driving his office manager crazy with her trying to work with us to manage the cash. We set up this account, funded it based off of the performance of the business by a percentage, and it really allowed them to purchase equipment, purchase buildings as they expanded into new locations, hire managers and crew members, and allow that time for them to get up and running to generate profit in the business. And I really love that as an advanced strategy is that growth account. The other one that is in the other accounts in the scalable growth business model is the flex season savings. And we say flex season because we didn't want to use the word slow. Like nobody wants to say, this is my slow season. We kind of said, well, it is when things slow down. But the person who kind of brought this up, they're like, I feel like my business is flexing a little bit. It's to where we have a really busy season and then, things just kind of ease up. So that's why we called it the flex season account, is when things might slow down or they're not as in highest demand because of whatever's happening. And some industries in different areas experience this, not just in lawn care and landscape businesses, but in the trade industries, is where things do ease up. The demand on your crew isn't so much. People aren't signing up, for, let's say, landscape or lawn care during a certain time of year. And one of the seasons that we see this happen a lot in is the end of the school year, right? Their kids are getting out of school, they're going on family vacations, they're disappearing for a few weeks. Another time of year that we see this is tax season, where people are so worried about what they have to pay in tax and scrambling to get those things together that they're not focused on, spending money in other areas, for maybe improvements on their home or kind of what's next. They want to see, where are we sitting after we file our taxes, and then they feel a little bit more confident. So this flex season account lets you identify how much you should be saving in your business when the demand isn't so high. So maybe you're short $50,000 a month, depending on the size of your business, or maybe it's just $5,000 a month. But that's $5,000 to $50,000 a month that you can take from this flex account to infuse that cash in your business so you don't miss a beat and it's not so stressful. So those are our additional accounts that we set up based off of your business model: is the vulnerability season savings, the flex season savings, and the winter down season savings account.
Awesome. All right. So you want to summarize everything we've talked about?
Yeah. So today we talked about what is the scalable growth business model? What does it mean? What is the point of such a snazzy name coming into, your business and how would you use it? So what is it used for? We talked about businesses that use it, that have used it, and what they've used it for. We unpacked the 5 key features in a scalable growth business model. So these are things that are outside the scalable growth business model blueprints that we share in the book that you need to pay attention to. And these are high margins, repeatable and automated processes, strong value proposition, access to capital, and the ability to scale. And then we talked about, the scalable growth business model. So we have 4 different business models, as Steve shared earlier. We have 2 blueprints in there. So definitely go to chapter 8, take a peek at these. If you haven't read the book from, the beginning to end, you can go ahead and do that. We suggest it. It tiers up to this level of strategy in your business. But also the way that I wrote the book is so you can go to different chapters and kind of pull the data, that you need. And we also have our free toolbox that goes with the book where you have access to pretty much every single tool that I talk about in there or concept. So you can download charts, done for you calculators, things like that.
Awesome. And this was kind of one of those wish list items that I wish I had. And that's why I was showing with Christine. It'd be great to know what all my ratios should be in my business at each size. And she put this together. It's a powerful tool. It's the only one like it in the industry. And I know I've had people try to punch holes in it and find all different cracks. And then they're like, when I point out why the ratios have to be that, they're like, oh, okay, makes sense. So it works. We ran it backwards and forwards 3 different ways. We've run it through multiple companies, and it just works. The only other thing I would like to add is a little bit of, it also depends on the age of your company. So some of your percentages are going to change based on if you're a startup, if you're maturity. Now, if you're a mature company and you're doing 0 to 250,000, that's going to be a little bit of a different conversation than a startup doing 250,000, someone that's running up to $1 million. So a little bit of the high and low can change a little bit depending on whether your business is mature or immature. So just be aware of that also. So this is great for the green industry, great for lawn care and landscape. I encourage you to take the assessment. And we're going to be offering a scalable growth business model assessment to the first 5 people who get the link. And you're going to use that offer code we're going to put in there in the show notes. And I would totally recommend taking that. If you're not one of the first 5 people, can they buy this? Can they sign up to take this? How do they do that?
Yeah, so we do include the scalable growth business model as a one-off paid for assessment. And that is, if you go to, our site, you will find that, a link for that. And we can include that in the show notes as well to where you can purchase it directly. And the other thing that I love is our membership toolbox. So our Green Profit membership toolbox, which has a lot more tools and done for you calculators built into the membership toolbox. In addition to videos, I'm always kind of adding goodies to it because, the people who utilize it, they're in there really trying to grow and scale their business and get these tools implemented in their company. So there's some more videos. But the Scalable Growth Business Model is a tool that is included in your coaching program at Green Profit Academy and your membership, your Green Profit membership. So we will include both of those links in the show note too. So you can go to the assessment and purchase it. If you're one of the first 5, congratulations, you get it for free. And I'll include a link for the Green Profit membership as well.
Awesome. That is very, very helpful. I know it's helped me and many other landscapers and lawn care businesses already. So if you are serious about your business and serious about meeting all your opportunities that are presented to you, this is a great tool. So take advantage of it. Well, thanks, Christine. I think today was a great podcast, and I look forward to our next one.
All right. Thanks. Y'all have a good day.
Thanks for listening to the Green Profit Academy Pros Podcast,
the show that digs into the challenges of growing a lawn care and landscape business while maximizing your profit.